Well, I guess we should probably, what is it, 10:02? I guess we should just get started and people will just join as we go here. As you know, we've partnered with Zavvy, and EasyKnock is on the Zavvy platform, and Nick here is going to talk about EasyKnock and the bridge solutions that we have for you guys. And so, Nick, you want to take it away?
Yeah, just give me 1 second. I'm going to share my screen. Let me pull this up.
Okay. Medeiros, you look very serious right now.
Okay, let's see.
How's that?
It says that host has disabled participant screen sharing.
Give me 1 moment. Let me fix that.
Awesome. Okay, I think I should be good to go now. Okay. Oh, let me make sure this is the right one. Yeah, this is. Okay. So sorry about that. Thanks everyone for your time. I'm going to keep this brief. I know everyone's busy, especially on a Wednesday, but I am Nick Tremalio. I'm a BD manager here at EasyKnock. What I'm going to do for you today is kind of run you through our buy box, product overviews, use cases, the benefits of EasyKnock, some example deals, and then we can do an FAQ or discussion at the end. But as I move through this, feel free to unmute yourself and interrupt me if you have a question. Don't let me kind of move through the presentation and have those questions lingering. So don't worry about interrupting me. I want to make sure that I answer and address all of your questions and concerns. Okay, so quick overview on EasyKnock. On the right-hand side, you can see some of our larger partners. On the left-hand side, you can see our buy box. Okay, our buy box is pretty wide open right now. We can transact down homes between $100,000 and $2 million. LTV, we're looking for a target LTV of less than 65%, but we can go up to 75% for sell and stay and movability. Now, really, it's important to understand that at our basis, what we're doing is converting home equity into cash. So the more equity you have in the house, the better that deal is going to look because the more money you're going to get up front. So just keep that in mind. That 75% number will make a little bit more sense as we get farther into the presentation here and we look at the example deal and that type of stuff. As far as client-specific requirements, we're pretty open on that as well. We're not a lender. It's very important to understand that. That means we're not held to a lot of the hard and fast numbers that lenders are. So we really have participants. Okay, sorry, I thought that was a question. We really have no client-specific requirements as far as credit score, DTI, or income goes. Great, so quick, high-level overview here. How does EasyKnock even help their partners? So we provide a seamless bridge solution for you guys. This is, and for your clients. That's our Movability product. We can help remove a lot of the fixer-upper woes. We're perfect for a client on the edge of pre-approval, and we can also help position you as a builder or a contractor's best friend. So really, we can help you guys save a listing, secure a listing, or distinguish yourself amongst the crowd of agents in your area. Now, EasyKnock has two products that we're able to apply to your market. It's Movability and Sell and Stay. Movability is the product we usually work with agents on because it's designed for people who know they want to move within the next 12 months. It's a short-term bridge tool helping them get the money they need to leverage in the moving process and get to that next property faster. Sell and Stay, excuse me, is that longer-term product. So it's for people who are looking for the liquidity right now, but they're open to moving in the future, but they want more time and flexibility. With Sell and Say, you get the option to repurchase the house at any point or sell on the open market. You also get unlimited time to rent. So that one's definitely more of a long-term option. Okay, so right now, this slide kind of shows you what transitioning between homes looks like, whether you're in a hot market or a cold market. So in that hot market, you can sell the house quickly. Purchasing the next is going to be contentious due to demand. A home sale contingency is a real offer killer because it causes you to put in a higher bid. And so to avoid the home sale contingency, a short-term lease or multiple moves are needed. You get kind of stuck in that sell, move, then wait, then move again situation. In a cold market, it just kind of flips, right? You can't sell the home quickly, but buying the next one is very easy. And so if you purchase, if you can't balance two mortgages, a home sale contingency is needed, but it's unreliable without pricing the house to sell. Now, potential to move out on a good opportunity here is huge. And so you're kind of stuck in that wait, sell, rush to purchase, and then move situation. So both of these are very inefficient, and we're coming in to kind of clean that up and reduce a lot of the stress here involved. All right, so now let's get into it. Movability is that short-term bridge product that I mentioned. This is what we usually work with agents on. The way it works is EasyKnock comes in, we purchase the house, clear title, get them out from under their mortgage, and provide the majority of the market value of the home in cash up front. That's money they're able to use to leverage in the selling process. Now, the client is going to become a market rate tenant in the house until it sells on the open market, but they're going to continue to completely control the sale process. They still get to decide when it hits the market, what the list price is going to be, what offers they accept, when they do showings. All that power is retained.
You know, this is the webinar. The webinar.
If someone's not muted, if you could mute yourself, that'd be great. See if I can figure out who it is. Lilia, maybe, Charlie, Camelia. There's several people who aren't muted.
Anyways, what was I saying? Oh, they control the sale process. Now, once the house sells on the open market on the back end, they capture the remaining value of the house and go on their way. So they get the full market value for the house, just most of it up front, the rest on the back end. Okay. Now, as far as fees, they're going to pay real estate commission. They're going to pay closing costs. Those are two things they should be expecting to pay in a traditional sale. Really, the cost of this product, the only fee they're going to pay here that they would not be paying in a traditional sale is a 3% service charge on the market value of the house. That's the fee you pay for the convenience of getting this money up front and being able to leverage it. Okay, so use cases for movability. The number one use case that I see all the time for this product is removing the need for a home sale contingency. So we can come in, get them the cash they need to put an offer down on the next house and not have to worry about a contingent offer. Another big use case would be covering the cost of repairs, renovations, staging, landscaping, anything to get the current house ready for listing, and also ensure they're going to get the most money out of it once it sells on the open market. We also do a lot of new build deals. So people who need money for the upfront fees that builders require, but they also need temporary accommodations until that house is completed. So really just depends on what their situation is. We're never going to tell them what they need to use the money for. It's completely up to them. But these are just some of the big use cases that I see a lot with Movability. So going into that home sale contingency a little bit, if you look at it this way, it might make a little bit more sense as far as the fee versus the contingency. So when you're putting a contingent offer down on the next house, you have to be extremely, you're not able to be aggressive with your offer, right? You have to incentivize that seller to accept your contingent offer versus an all cash offer. And so what that means is that you have to either go full ask or above ask. You have to really, you essentially lose all of your negotiating power. And so with Movability, we completely flip the script there. We give you certainty, and knowing you're getting these funds upfront, you're going to be able to leverage them in the sale process. So now you have money to use for a down payment. You don't have to worry about a contingent offer, and you can be extremely aggressive with your next offer for the future property. So yes, you pay a 3% fee, but you know exactly what you're paying. And if you compare that 3% fee to what you would be overpaying on the next house with a contingent offer, it's going to be far less. Great. So this is the example deal. Let me run you guys through this, make sure you fully understand how a movability deal plays out. After this, you can hit me with any questions that you have so we can make sure that all concerns and anything about movability is addressed. Now, for the example deal, let's assume we're talking about a $300,000 house. They have $100,000 in existing mortgage balance. That means they have $200K equity in the home. The max amount we can provide up front is 75% of the market value of the house. So 75% of 300,000 is 225. That leaves 25% or 75,000 to be paid out on the back end of the deal once the house actually sells on the open market. So in the beginning here, you'll see how this works out. EasyKnock comes in, give 225 up front. We're going to subtract the mortgage balance, so subtract 100,000, subtract EasyKnock's 3% fee, the 3% fee right here, and subtract the closing costs. The rest is what they get in cash up front to leverage in the selling process. So for this example deal, that would be $113.30. Now the client is going to be responsible for monthly rent until the house sells on the open market. They do have the option to defer the monthly rent cost to the back end final sale if they would like. So if they don't want to have to worry about paying any monthly rent or any monthly fees or anything like that, or any monthly costs rather, they can defer that to the back end. Or maybe the market rent is a little bit higher than what their previous mortgage payment was, and they want to keep it at the same exact value. They can defer a portion of the rent to the back end final sale so that their monthly cost doesn't change. Now, option one here shows what happens if they don't defer any rent. They just pay monthly rent until the house sells. They are owed that 25% on the back end plus any appreciation. So if they're appreciated 5%, they get an extra $50,000. They get any appreciation that the home incurs minus the agent's commission. Okay. If they decide to defer some rent, that's fine. It's going to be 25% on the back end plus any appreciation minus however many months rent that they deferred minus the agent's commission. All right. So as far as the agent's commission, you're going to get your full real estate commission. That doesn't change. In fact, what we're going to do is pay 1% upfront to you when we close the deal with the client to ensure that we're getting money in your hand as soon as possible. It means if you're in a 6% market, usually you get 3%, the buyer's agent gets 3%. You would get 1% upfront and then 2% once the house actually sells on the open market. All right, that's everything that I have for movability. So feel free to unmute and chime in here if you have any other questions or any questions at all about the product or the process.
Two questions. What is the holding period, maximum holding period? And also, what interest rate are you charging these folks?
Yeah, great question. So holding period, I'm assuming you mean how long can they rent the house for? How long was the lifetime of this deal? This deal is designed for people who are motivated to sell. They know they want to sell within the next 12 months. So this is it's a short-term bridge product. They sign a 12-month lease. The lease breaks immediately once the house sells on the open market. But the goal here is to get that house sold within 12 months. As far as interest or anything like that, we don't charge any interest. We're not a lender. This isn't a loan. We're purchasing the house in the beginning. That's how we're able to convert their home equity into cash, pay off their mortgage, and they get the rest of the money minus the closing costs and the processing fee. So there's no interest. They pay a 3% processing fee on the market value of the house, and that's it. That's the only fee that they're paying here that they would not be paying in a traditional sale.
Nick, there's a question in the chat about if it's a 5% total commission, but if we're going this route, there's no reason for agents not to take a 6% commission, right?
Yeah, so the client's going to pay the commission to you guys, and so you have the power to negotiate whatever commission you want with them, just like you would in a traditional sale. Obviously, we're a national company. We operate in all 50 states, and so most markets are either 6% or 5%. If you're in a 5% market, you can continue to charge that. If you want to try and charge a 6%, it's fully up to you. I would say you should expect to get whatever you get on a traditional sale here.
If it is a 5% commission, how's the breakdown? What's the upfront versus
yeah, it's the same thing. We're going to give 1% upfront, and then that's just taken out of the back end. So you'd get 2.5 on the back end usually. Now you would get 1.5. So 1% upfront, 1.5 on the back end.
Gotcha. Do you see the questions in the chat, or you want me to keep telling to you?
I can. Let me pull it up here and put it over here. Okay. do you do an appraisal to come up with the value, or does the agent tell you what value is? Awesome question. So that really it's both. What we do to come up with the value for the house in the beginning is we're integrated with CoreLogic. So we use their AVM called House Canary. That gives us a good starting point. But part of the deal submission process is we're going to ask the agent, what is the market value of the house? What do you think the market value is? We're going to heavily rely on that number that you're providing us because you're the local expert. We don't want to pretend to know that market better than you do. Part of our closing process is going to include an appraisal and an inspection. So really, it's the intersection of all those data points. Now, it is important to remember that's just the number we're able to fund off of. So in this example deal, say, you're telling us 300,000, the appraisal is telling us 300,000, everything's pointing towards that. Great, that's what we're able to fund off of. If the client wants to list it for 325 or 330, that's fully up to them. They get to decide what the house actually gets listed for on the open market.
And then one more from Susan here, yeah.
Yeah, I see this. Does the title of the home change to your company instead of the current owners? Another great question. Yes, we do change title. That's how we're able to do this without it being a loan. So we would change title. However, all of the power in this sale process is awarded to the client in our contract, as well as the additional money on the back end of the deal.
Hey, Nick, this is Katrina. I have a question.
Sure.
So as an agent, are we writing this, like the listing up, or do we basically send it over to your company and you guys handle all the paperwork? How does that work?
Yeah, so we will sign a broker referral agreement with the agents, the clients, and ourselves. Now, we're going to be on the listing agreements because technically we own the house. And so at that point, and so we have to be on the listing agreement and all the closing documents. But we will work together, the three of us, essentially. Okay. We kind of stay out of the process as far as we're never going to tell them that they need to drop the price or which offer to accept or anything like that. That's fully up to the clients. But as far as like signing the documents and paying the closing costs on the back end, that's all on EasyKnock. So the client's only going to pay closing costs once, and they pay that on the first transaction when we purchase the house. We pay the closing costs on the back end when it sells. Does that answer your question?
Yeah, thanks.
So to take Katrina's question a little further, so if our agents are going on a listing presentation and they find out this is a viable solution for their client, what's their first step? They sign a listing agreement with the client, or they reach out to you guys first? How?
Yeah, it really depends. I mean, there's no specific rule that tells them when they have to integrate this in their sales cadence. I would say a lot of our top agents reach out to EasyKnock before they even have a listing agreement in place. Maybe they know they're going to go to this listing appointment and they want to be able to show the client that they have this as an option for them to kind of, separate themselves from the crowd of other agents that the client is going to be talking to. So they would talk to EasyKnock. It's non-binding, doesn't lock you into anything. When you request an estimate, all the information flows to the agent. So we're never going to contact the client without speaking to you first, right? You're a partner. This is how this is going to work. You submit the deal. It takes us about a day to get back to you with an estimate. It's going to be fully broken down. We'll jump on a call with you, make sure you understand how the deal works and the numbers behind this specific situation. And then you can decide how you want to loop in the client. So if you're doing this before a listing appointment, that'll give you the option to show up at the listing appointment and say, look, if you need money up front, I work with this great company called EasyKnock. We can get you, this is exactly what that deal would look like for you guys. I already have an estimate for you. You'd be able to get $113,000 up front to leverage in the selling process and use as a down payment. This is an option for you guys if you want it. And so you could do it that way, or you could wait until you have the listing agreement. You're already set and working with the client, and then introduce it as an option. If you already have a listing agreement in place with the client, it's fine. We'll just amend it and make sure we're on the agreement once we do the deal and purchase the house. Any other questions?
Yeah, one more question, Nick. How long does it take for sellers to receive their funds if they do go this route?
Yeah, so we're pretty quick as far as our closing process. Now, our average time is about 18 days right now, but it really just depends on how fast we can get the appraisal and the inspection done. I've seen a deal close in as little as 7 days, which is pretty fast. but I think our average is 18 days. It just depends how fast an appraisal and inspection are going to take. You guys know that a little bit better than I do, since you're operating in your market right now. So that's the only thing or that's the most time consuming part of the closing process, but should be about 18 days. Cool. Any other questions before I move on to sell and stay? Awesome. All right. So sell and stay is our longer term product. This is the one that has a little more flexibility and time involved in the process. And so the opportunities or the use cases for this are pretty endless, because it's designed for anyone who needs money upfront for a specific opportunity. Now, the situations that I see most of the time with sell and stay customers would be someone who needs money for some sort of bill, credit card bills, medical bills, tuition bills for their kids, something like that. Could be a small business owner. Maybe they want to open up another store, or it could be a small business owner that's kind of struggling right now with Corona, something like that, and they need some money to cover overhead for their employees. Another situation I see a lot is divorce. So where one person wants to stay in the house and the other obviously wants to leave. So really just depends on their situation and what they need the money for. But one way to look at it is as a non-lending alternative to a HELOC, a cash out refi, reverse mortgage, something like that. So the product is going to be structured very similarly to Moveability. The main difference here is that you get unlimited time to rent. So you can rent for as long as you would like, and you get the option to repurchase the house for a predetermined price at any point in the lease. So at any point, you can decide to repurchase the house or bring your agent back and sell on the open market. Now, the other difference between this and Moveability is that there is an additional fee. It's paid out on the back end of the deal. It's anywhere from 1% to 5%. It's determined based off the lifetime of the deal, how long they rented, as well as what the initial funding percentage was. So that's the fee you pay for the convenience of having, more flexibility here, having unlimited time, and having that option repurchase. So the beginning of this deal is going to look exactly like Moveability. So same assumptions here. We're going to come in, purchase the house, clear title, pay off their mortgage balance. We can get them 75% max up front. So pay off the mortgage balance of that, pay off the EasyKnock's 3% fee, and then pay off the closing costs. The rest is what they get in cash up front. So same deal here. You get $113.30 up front. Client is going to rent for as long as they would like, and they're responsible for monthly rent until they either repurchase the house or they sell on the open market. Now, option one is they sell the house. Well, actually, one option is that they repurchase, right? So repurchasing the house, it's predetermined price. It's going to be the amount we provided up front plus that 1% to 5% option premium. And so if we gave them 75% up front, that would be $225 here. The repurchase price would be $225 plus a 1% to 5% fee. Now, option one on this slide shows if they sell the house at market price. Now, I'll tell you right now, the vast majority of sell and stay houses appreciate a significant amount because people are staying in these homes for 1, 2, 3 years, right? So, but if the house sells for the same market price that we found it to be worth in the beginning of the deal, they're going to get that 25% on the back end minus the agent's commission minus the option premium. If it appreciates 10%, amazing. They get 25% plus any appreciation minus the agent's commission minus the 5% option premium. So that is how sell and stay works. As far as the agent's commission, because there's no guarantee that they're going to sell on the open market, right? They do have the option to repurchase. We want to make sure that you're getting paid quickly, fairly, and upfront. So just for bringing us the deal and helping it close, you get 1% instant commission paid by EasyKnock. This is not paid by the client. This is fully out of EasyKnock's pocket. And so that's what you get without having to list, market, or sell, or show the house, right? Say 2, 3 years down the line, the client decides that they want to sell on the open market. Awesome. We're going to bring you back as the agent, use you to sell that house, and now you can double dip. You can get the full real estate commission in addition to the 1% instant referral commission we gave you up front. All right, so that is my explanation for sell and stay. Let me know if you have any questions.
There are several questions in the chat. Once you
Okay,
take title, you want to go through them?
Yeah,
Okay.
I can open this up. Just give me 1 second here. Okay. Once you take title, who's responsible for paying existing mortgage payments? So actually, when we're transacting on these houses, we're paying off the mortgage. That's why we're subtracting the mortgage balance from the upfront fund. So they won't have a mortgage anymore. It's no mortgage on their record. That clears out all the loans and liens on the house. So it should actually be a little easier for them to get a better deal on the next mortgage if they're doing movability, or if they're doing sell and say and moving to another home. But the mortgage is paid off by EasyKnock. That means we're also covering HOA, taxes, real estate insurance while the client is renting. Okay, how is the rent amount determined? Great question. So rent amount is going to be determined very similarly to how we come up with the market value for the house. We're going to use House Canary, that AVM, to give us a good starting point, and we're going to rely on the agents to keep us in check. So House Canary obviously operates on local market comps, and then you as the agent can let us know if the rent is out of whack. So part of this process, right, like I said earlier, all the information flows to you. Before the client even sees an estimate, we jump on a call with you and go through it so that you can tell us if something doesn't look right in there. So kind of a stopgap before anything even gets to a client. Okay. What happens if the client changes their mind after appraisal and inspection have been done? Who pays for those inspections? Wow, that's a really great question. I believe that the client pays for those inspections and appraisals because they sign a purchase agreement that states that they're willing to pay for this appraisal and inspection to move the deal forward. However, I'm not 100% sure on that, and I don't want to give out any false information. So I believe that's the case, but I can check with my transactions team who handles that closing process and get back to you on that. That's a really great question. Okay. Next question. Where is the purchase side of the agent commission? Where there's an instant commission, the listing commission, but where is the selling commission? So I'm a little bit confused. Or if you're talking about sell and stay, because there's no guarantee that they're selling on the open market, right? They could just repurchase the house. We pay the instant commission. We give you a referral commission of 1% for sending us this deal and helping it close, right? You're not having to list the house on the open market. You're not having to show it to clients, market it, and sell it to someone. You're just bringing the deal to EasyKnock, and you get that 1% referral commission. If they end up selling on the open market later on down the line, then you'll get paid your full real estate commission in addition to the referral that we gave you up front. If it's a movability, let me go back here. Movability, you're going to get your full real estate commission, right? We're going to give you 1% up front to make sure you're getting cash in your hand as soon as possible, but you get your full real estate commission. So you said you guys are in a 5% market, so you would get 2.5%, and the buyer's agent would get 2.5% as well. So it should look very similar to a traditional sale. Does that answer your question, Ryan? Okay, looks like I kind of answered the question. If that's not clear enough for you, you can let me know right now, or we can jump on a call to discuss later.
Unmute yourself if you want to ask, if you want to be.
Yeah, I think commission is very important for everyone to understand, because we're not an iBuyer. We're not coming in and trying to undercut you guys. We're not trying to disintermediate your position in the sale here. You're a partner. You're doing a lot of work here, and so we want to make sure you're getting your full commission. It's paid by the client, so just like in a traditional sale, but you will get paid your full commission. That I want that to be very clear. Are there any flyers that we can take to listing appointments? Yes, definitely. So Zavvy should be able to get you guys plugged into our marketing site. You can also go through our partner portal if you want to do that, whichever is easiest for you. We have a full suite of marketing materials that you're able to co-brand with your headshot, your logo, your contact information, all of that stuff. So that is all available to you guys, one-pagers on the products, for agents, for clients. There's deal process one-pagers, there's agent starter packs. There's a lot of great content in there for you guys to use to market this as an option for your clients.
Nick, 1 second. Alondra, do we have marketing materials already available for the agents?
No, but I'll connect with Nick and make sure that we do.
Or Zavi? It sounds like we need to connect with Zavi for it.
Okay.
Yeah, you can go through either of us. Either of us can help you guys get connected with that. There's we have a link that you guys can use to get signed up for EasyKnock's suite of marketing materials. It's online, so you can access it anywhere, and then you can co-brand them wherever you want.
Sounds good.
Cool. Let me move through here. Any other questions on sell and stay or movability? Awesome. So this is EasyKnock's partner portal, but since you guys are plugged in with Zavi, it's easier to get that estimate just by sending them the address and going through the offer optimizer in that process. But if you want to sign up for EasyKnock's partner portal, you can do that as well. The link is portal.easyknock.com. Great. Well, that is everything that I have for you guys today. So if you have any more questions while I'm here, definitely feel free to unmute and jump in. Otherwise, thank you for your time.
Thanks, Nick. Very good job.
Cool. Thanks, guys. And then I want to make it clear, you can always reach out to me. Shoot me an email. My email is nick@easyknock.com. Pretty straightforward. I'm always willing to jump on a call to hear about a client and help you figure out if this might be a good idea for them. We're really flexible here, and we want to be partners, right? So this is free for brokers and agents to use. It's really just a great tool for you guys to keep in your pocket and use to secure some more listings and kind of show your clients that you really are providing all of the options available to them.
Sorry, I have a question.
Yeah, no worries.
So, is there like a tenant in place kind of agreement for them then for the 12-month if they were to?
Yeah, they sign a 12-month lease, but in the lease it states that the minute the house sells in the open market, the lease breaks. So they're not responsible for any rent after that. The rent is obviously prorated, so they're only paying rent for when there's when they're in the house and when the house has before the house is sold. So yeah, there is a lease agreement. It should be available through Zavi as part of we have some sample contracts that they should be able to send you guys so you can take a look at how everything plays out.
Okay, and then if they turn like upside down and they just stop paying rent, then what happens? I mean, you have to go through legalities of all that.
Another great question. So definitely it would be an unfortunate situation. Out of the thousands of deals that I've seen, I think I've only seen that happen once. And look, we don't want anyone to think that we're trying to steal their house, right? So if they stop paying rent, obviously we have a few months grace period here where we're going to do everything we can to work with them to get the rent paid. If this is something that they're worried about beforehand, they can defer as much of the rent as they want to the back end final sale. So that's one kind of preventative measure we can do if this is something you're worried about. But if they're unresponsive, they refuse to pay rent, and they're not working with us at all, after the few months grace period, we will take control of the sale of the house and work with the agent to get the house sold. Once the house sells, they will still get all the money they're owed on the back end. We're just going to subtract the missed rent payments. We're not taking anyone's equity here. We're not stealing anyone's house. Obviously, if they're signing an agreement and agreeing to pay us rent, just like any rental situation, they owe that rent. So we would have to take control of the sale of the house and make sure that it does get sold for the most money possible, so that we're able to pay off the missed rent and still give them all the money we can on the back end. But like I said, I've only seen that happen once, and that was before we had the ability to defer rent to the back end. So with this new concession that we have plugged in here, the ability to kind of put off those monthly rent payments until the final sale, it really should make it a lot easier for people to cover the rent here, or ease any worries that they have, right? We understand, especially in today's climate, a lot of people are losing their jobs and maybe worried about a rent payment. So we want to be as flexible as we can, and we want to be able to kind of structure the product around them so that they're as happy as can be. At the end of the day, we're in this business to help people, and we want people to be happy with our product.
Awesome.
Anything else?
Alondra, we'll get an email out to everybody with a link to the marketing materials ASAP, so you guys have that available for yourselves.
Great. Well, thanks again for your time. I appreciate it. Hope I kind of cleared up a lot of questions and issues here. And look, we're super excited to partner, and we are ready to get some of these deals across the finish line. So, like I said, let me know if I can help.
Thanks, Nick. Appreciate it. Have a great day, everybody.
Awesome.
Thank you. Okay, you too. Bye.